Hamish, welcome to InvestorStream for the first time. Now, for those new to the company, Delorean operates as a vertically integrated business positioned in two high-growth industries, that being renewable energy and waste management. Now, Hamish, you've just announced the appointment of Planum Partners for the funding of the development pipeline. Now, as Delorean is the only ASX-listed player with commercial production of mains-grade renewable gas and bioenergy in the form of biomethane, how will this appointment impact your business going forward?
Yeah, it's a pretty big milestone for us. I'll just probably remind investors that we're one of only a very few green stocks on the ASX. Stockhead recently had us as one of 25, and we are specialising in bioenergy and particularly biomethane, which is this growth industry. We're in two high growth markets, as you explained, the waste sector, and we're participating in the renewable energy sector. And because we get revenue streams from both of those, our projects are high yielding. Now we're transitioning out, we've got a 5-year track record in profit, but predominantly based on EPC contracts and retail margins. We're transitioning to become an infrastructure owner, and we've got a project pipeline of about 77 million in projects on foot around bioenergy. One of those is the Devo project in Victoria, which is a $13.4 million project, $13.8 million project, which is currently in build using the IPO funds that we received. But behind that, we've got the $22.4 million DeSeo project in Adelaide, which will become a priority for Planum Partners funding mandate. So both of those projects will be ready, subject to funding, in 2023, Q1 of FY 2023. Behind that, we've got about 46 million in projects which are under development, which will be FID ready within 12 months. So with this combined portfolio, we're looking for certainty around project finance. And we've appointed Planum Partners with a mandate to essentially take the leadership in the arrangement, provide the advice and take the leadership and the arrangement in that finance package. The mandate for them is in tranches up to 200 million, so well beyond the 77 million in projects we've got now. And we chose them because they're specialists in renewable energy and have got a track record, particularly in energy infrastructure projects. So they've done deals between hundreds of millions to 1 billion, including Perth Stadium. They were behind the Tesla virtual power plant in South Australia and provided finance for the Colgar wind farm. So we've got a high level of confidence that Planum's the right player to do the finance wrap for our projects. I guess what it means is that we can now fast track the delivery of those projects with the confidence that the finance will be in place when we're ready to reach FID on each project, and including refinancing or financing the projects that we've currently got on foot so that they're more advantageously funded.
Thanks, Hamish. Now, it's been a few months since Delorean listed. What has been your key focus since the IPO back in April, and what have been the key activities since then?
Sort of mentioned this transition from EPC contractor growing out and retail margin of clean tech energy, the electricity retail margins. Our focus really has been on delivery of what we said in the prospectus. The transition and growth into the infrastructure ownership and operation is essentially the key plank of our forward strategy. And the whole idea of that is to provide annuity-based income streams from free cash flows from those projects that give us more certainty around and predictability around our earnings that can be a little bit lumpy around projects and retail. We've had some real successes over the last few months since listing. On the EPC contract side, we've got 2 EPC contracts on foot. The $7.6 million Blue Lake milling project in South Australia, which has produced first gas now, is connected to the grid. We've had the generator running and we're waiting to grid export. The Pioneer project in New Zealand, taking organics from Auckland City Council's, food organics from Auckland City Council's collections. The civils have been completed by the principal, and we're now moving to the construction, the on-ground construction of that project. Behind that, on the EPC front, with Biogas Renewables, our EPC company, we've been tendering for a major contract in Victoria, and we expect that to be announced later this year. So we're looking forward to the outcome of that project as well. On the infrastructure projects, I mentioned that we've got the $77 million portfolio. We've been going forward in earnest with that. The Devo project site works have commenced and construction's expected to start now in September off the back of the IPO funds. The DeSeo project's waiting for FID this calendar year. Planum Partners will be a key plank in that. We've also got on foot a $5.3 million arena grant, which, if successful, will close inside of the calendar year and allow us to essentially go forward with that project, still planning to finish that project in FY 23 Q1. Our 46 million in projects behind that are both actively in development, one in Queensland and one in Victoria. And again, we expect to have those resolved inside of the 12 months. So all of those are on track. So sort of shift the focus to clean tech energy and the retail business. I was reminding investors that we're WA-based retailer, but we've got licenses in the national energy market to expand east. Since listing, we're really pleased to have had an 18% growth in contracted volumes since the IPO mid-April 2021. That's pretty consistent with what cleantech's been doing historically in the marketplace. So that growth's good. We expect that to increase as we transition into the east. And we're on track for that geographic expansion. We signed our first customer last month in Victoria. And cleantech wants to articulate an opportunity or a market, a unique selling point in the eastern states market. And a lot of that focus will be on what we call a district energy resource strategy, or decentralized delivery of generation, which together provides a platform, a micro generation that's distributed, that provides a platform for power purchases agreements and asset ownership, so we can underpin our growth with our own customer base tied into decentralized micro generation for provision of that renewable energy. Probably importantly, we've seen a massive uptick in the interest from the marketplace in biomethane. So fossil fuel providers, the pipeline operators, and even hungry large-scale users of gas are very keen to decarbonise the pipeline, very keen to decarbonise their network in an environment where there isn't a renewable energy scheme or a certificate scheme for gas. So we're getting a lot of demand for that. It's outstripping our current supply, at least from projects. And we feel that's going to be a real opportunity for the future, certainly emerged, particularly around the last 3 months. We've got contracts in that and we've got a lot of interest. Beyond that, the hydrogen market, whilst probably not commercially viable now, is emerging. There's a lot of interest in it, and biomethane provides the platform for delivery of hydrogen as well. So we're looking at opportunities to tie in partnerships that might deliver hydrogen from the biomethane that we produce from our assets.
Thanks, Hamish. Now, before I let you go, I understand Delorean will release their preliminary financial reports at the end of August. However, you've just shared a results guidance. Can you give us some context into these numbers?
Yeah, so as you say, we've got the annual report coming out in a week, and we'll have a lot of detail obviously in there. But just tail end of last week, we received the recommendations from RSM, their proposed adjustments. We've worked through those adjustments, and we feel that if all of those adjustments are accepted, it's important for us to make a guidance recommendation to the market, which went out this morning. In summary, our revenue is materially on track at 28 million against the 30 million that was in the prospectus. The audit adjustments mean that the final underlying EBITDA will be closer to 3 mil, which is 800 grand less than the 3.8 mil that we predicted in the prospectus. The underlying EBITDA basically eliminates one-off gains and losses that aren't likely to reoccur. So that includes the IPO costs and the impacts of share-based payments and so forth. But in some cases, those payments or those adjustments are also timing related. So we've had adjustments that are recommended that have a timing impact, which will transfer earnings to FY22, and another one at a fairly high level, which will transfer earnings to 2024, FY 2024. So these profits are resolved, but the timing means that they weren't able to be reported in this financial year. The full details will come out in the annual report, but I think as majority shareholders, the managing director, Joe Oliver, and myself in the executive chair role, we're comfortable that this transition from the EPC contractor energy retailer to that expanded focus on infrastructure ownership with annuity-based income streams that mean that our earnings will continue to stabilise, become more predictable each year as we get more into the annuity-based earnings model. Our aspiration is there to move to a price earnings and even ultimately be in the position to be able to pay dividends. I think the other thing is that we've really this year washed through the inevitable lining up of a new company going through its first audit, resolving what the sort of underlying or structural audit issues might be, and then we expect to wash that through, so we expect more predictability in the future financial years.
Fantastic, Hamish. Really appreciate you joining me today, and all the best with the development.
Thanks very much, Alex. Appreciate it.